as a traders or investors, we are really keen to know these kind of data when they're coming out. If the CPI is coming out this week, let's say, it was last week when it was coming out, you have to stay away from the market because there will be high volatility in the market, okay? Because the numbers might change. The forecast number and the previous number and the actual number, if they are matching, then the market will be stable. But imagine if the forecast number and the actual number mismatch. If it comes higher or lower. If it comes higher, the market will dip so badly. If it's lower, the market will be stable, or it might dip a little bit, then might be in a long term will come up or move up. That's what they do. All these big companies, all these manufacturers, supermarkets, where they pass the high cost to us as a consumers, and we need to buy it because we have no other choice. Okay, then the interest rate picks up, the economic growth slows, then interest rate falls. When they see inflation is so high and it's hiking up, the interest rate will be raised, and Jerome Powell and his team, the Federal Reserve team, they use quantitative tightening. So when the DXY, okay, if the DXY is getting appreciation, what's happening in the market? What will happen to the stock market, to the forex, to crypto, to gold, everything will dip. Everything will dip. Okay, that's the whole point. We need to understand how the markets correlated, whether it's a negative correlation or whether it's a positive correlation. Okay, so DXY is a negative correlation to the market. If the dollar strength is going up, while the interest rate is increasing, as they said here, the value of currency will increase or appreciate. Okay, if the DXY is appreciating in a value, what's going to happen? The BTC will dip. S&P 500 will go down. Nasdaq will go down. Okay, because we are buying and selling in US currency, right? So let's take example in Kenya now. If the interest rate of Kenya is very high, the companies, the manufacturers, what they will do? Will they export their product or they import other products? Thank you, Mercy. They will import because the interest rate in Kenya is so high, they cannot buy something from the country. So they will import. That's why we put it there. And less competitive the imports and more competitive the exports. Therefore, imports are increased and export will decrease. So do you see now how they balance now? The market will never stay down forever, and it will never go up forever. So there is a cyclic movement. It goes up, comes down. So that's why we need to know the Federal Reserve and what they're doing. That is very important today, this meeting, the Jackson Hole. The Jackson Hole Economic Summit, it happens every once in a year, and all these big companies and central banks and policymakers, academics, economists all around the world, they meet in this annual meeting. Now, if you look this chart, what do we see here? We see the AVAX rejected from the previous zones that was demand zone, as you can see from here. And there's resistance on the top and the support on the bottom. So when we have this kind of traffic, price become resist, flip to the support, we call it conjunction area, right? A conjunction zone. So now what I have here, the market dropped in one reversal patterns, which is called rising wedge. Then falling all the way down and pushed back again. Then dropped back again and pushed back again. The price was creating what's called lower highs, right? Lower highs. Now we have here high, low, indicator we have low, high, higher high. When we have indicator reading higher high, the price we have high, lower high, we call it hidden bearish divergence. Okay, and the market dropped back all the way down. So when the market dropped all the way down, the market created lower low. We have here low, another low, we have lower low. Indicator shows a low, higher low. It's called regular bullish divergence. And that is reversal pattern itself and gives you a clue the market is reversing to the top side. Then I have here candle confirmation, which is giving me an entry to the market. That's why I entered AVAX trade. And today we're in profit, as you can see, 1,127 USD. I'm still holding that trade. And although I closed half of it, the other half is still running. And I'm risky-free trade now. Okay, my entry is break even. So if you look at the chart, what do you see now? What do you see now? You see the chart was increasing, right? And we have here, look at the graph. Where we're heading? We're heading to the top. So look this, we start from here, we're heading to the top. That means we're in profit. That means we're in profit. This is a real money, guys. It's not demo account, it's not fake account, it's not anything like that. It's a real money. Okay, now if I withdraw that much money, 1,127 USD, how much would that be in Kenyan shilling? That will be almost 150K, right? 150K Kenyan shilling in I think 10 days now, Peter? 10 days. Who makes 150 Kenyan shilling in 10 days? And how much money I'm trading, guys? Not much. No, that's the profit.
That's the profit.
That's the profit. I'm trading 2,000 something, right? 2,500. So if I'm trading 2,500, making this much money based on the knowledge that you have. Learn the skill. That's what I'm saying. Learn the skill. If you learn the skill, there's abundance money in the market and you can make any amount of money that you want. The sky is the limit, guys. If you know what you're doing. What I always say, 4 things, right? Remember? Who can repeat that? Knowledge, discipline, patience, risk management. If you master these 4 factors, you become pro in the market. And that's what you want. Learn the skill. What they say, learn, then remove L, N. Okay? We learn, then we earn. That's how it works. There's no shortcuts. A lot of people lose a lot of money in the market because they're looking shortcuts. They don't want to learn. They want to watch a few clips on YouTube and they think they can make money out of it. Based on what you learned today about this major fundamental news, is that true? Okay? So when you know what you're doing and you know this kind of information, you can implement. What do I say all the time? How it works. Let me write down here somewhere, or just write down here itself. 2 things you need to master. How it works and how to apply. That's how it works. So if you know how it works, you can apply it. If you don't know how it works, can you apply it? No. So we need to learn how it works and we need to apply that. That's why I'm saying to you, practice what you have learned so far in the lecture. And that's what you're doing. You're backtesting all the CPI data that came out the last year and see the impact that it have on the chart, on the price. If the CPI data was high, the price will dump. If the CPI data was low, the price will pump. Am I clear? Let's continue.